Confiar é sua maior arma contra os golpistas. Se alguém te pedir dinheiro, Pix ou transferência, pare e pense. Pode ser golpe. Entre no site da Febraban e saiba mais.
Não existem limites para a imaginação humana. Fomos da roda aos foguetes espaciais, do telégrafo ao 5G, do ouro ao Bitcoin. Estamos sempre explorando novos mundos, mas para chegar até eles é preciso viver o futuro hoje. Explore o novo, destrave outros caminhos. Descubra o futuro do dinheiro. Chegou a Mynt, sua nova plataforma de criptoativos. Mynt, desbloqueie seu mundo cripto.
O uso de stablecoins tem se popularizado no Brasil e no mundo, e com o lançamento do real digital, é muito provável que isso aconteça de forma ainda mais rápida no país. Eu sou o Gabriel Rubinstein, esse é o especial Real Digital aqui do Future of Money e da Exame, e você fica agora com dois dos maiores especialistas nesse assunto no painel Stablecoins, Real Digital e a nova era da economia tokenizada.
Bom dia, pessoal, tudo bem? Bem-vindos à semana Drex do Future of Money da Exame. Essa semana inteira especial que a gente está fazendo só com conteúdos a respeito do Drex, do Real Digital. Eu sou André Portilho, sou Head da área de Digital Assets aqui do BTG Pactual, sou sócio, e hoje eu tenho um prazer imenso de receber uma das pessoas que está puxando essa frente de cripto, de stablecoins no mercado internacional, que é o Jeremy Allaire, o cofundador e CEO da Circle. A Circle é uma empresa que é uma das líderes da emissão de stablecoins em dólar, está desenvolvendo muitas coisas em termos de tecnologia, e o Jeremy, além de ser o co-founder e o CEO da Circle, ele tem um grande histórico de empreendedorismo na internet desde os anos 90, então assim, é um prazer ter ele aqui com a gente. Eu vou mudar agora para o inglês para poder trazer o Jeremy aqui, tá ok? So Jeremy, after this brief Portuguese introduction, switching to English, first of all, thank you very much for being here with us.
Thank you.
Future Money is with Exame. We're doing, I would say, they're doing a great work in bringing the right narrative for the markets related to crypto, CBDCs, DREX. So it's a pleasure to have you here. I already gave a brief introduction about yourself. So I would love if we can start with you giving our audience a brief introduction of Circle. What is the vision? What you guys are doing? We are talking to a broad Brazilian audience, so I'm sure a lot of our audience already know Circle, but for the ones who doesn't know Circle, if you can give us a brief introduction, please.
Sure. Thank you again for having me on the program. Excited to be able to share our perspectives. So just a little bit about Circle. Circle is a company that I co-founded 10 years ago. So we've been involved in the digital currency industry for now over 10 years. And the vision of the company, when we founded it, was that blockchain technology, which back in the 2012, 2013 was very nascent. It was a very new technology, but our belief was that the technology would evolve, and that within several years it would become possible to build what we like to call a protocol for money on the internet. And when we talk about money, we're specifically talking about government issued money. So what people call fiat money in this whole area. And we believe that blockchains would evolve so you could not just have these new cryptocurrencies like Bitcoin, but that you could issue traditional currencies in a digital currency form. And that using technology like smart contracts, which 10 years ago was really just an abstract idea, there was no real technology there. With technology like smart contracts, that you could actually build what my co-founder and I called an HTTP for money. HTTP is a protocol. It's how we share all the information in the world today through HTTP, an open, decentralized protocol for information exchange. on the internet that gave birth to the web. So what if there was an HTTP for dollars on the internet? And we saw that that would become possible. And so the vision behind the company was to really try and build a layer of protocols for traditional money to move onto the internet. And we believe that if we could do that, that eventually it would be possible for the movement and storage of value to basically become commoditized, so that you could move value anywhere instantly at virtually no cost with the speed of the internet, but with very new privacy and security capabilities that blockchains made possible. That effectively you could have this commoditization of payment utility on the internet, and that would be very powerful, would unlock new economic activity, would unlock new financial activity. And so we've worked on that for many years. And 5 years into our development, the technology matured enough that we could do this. So we launched a product called USDC. And so today, Circle's mostly known for USDC, which is a digital dollar that runs on blockchains. And we operate it as a regulated financial institution all around the world.
Amazing. And here you're talking about that, about the protocol thing, Jeremy. It's sort of like I can do a lot of analogies of the vision in the beginning of the internet, where the technology was not exactly ready, but the vision was already there. So people start to build. And I imagine you went through that. You had the vision, technology probably was not there yet, but the vision, and people tend to underestimate the development of technology a lot of times, right? So people keep very skeptical in the beginning, but yeah. I love this vision. And I want to touch on something that goes on this issue, okay? Because in the last decade or so, we've seen a lot of, I would say, developments and evolution when we talk about finance, when we talk about markets, and even when we talk about money, okay? We have like fintechs, crypto, mobile payments, but even so, people still have the feeling that this industry, money, is still lagging behind in terms of innovation, in terms of evolution, if we compare to, let's say, other industries, for instance, information, or do you have this feeling? And if yes, why is that? Is regulation, is technology?
Yeah, I think, you know, I like to refer to myself as an internet maximalist, which is to say, I believe that open networks, open protocols, open source software that are connected over what we call the internet, that kind of infrastructure will gradually take over more and more parts of how we operate society and the economy. And the internet infrastructure over the first really 20 to 30 years of the commercial internet really did do that. These open networks and open protocols and software powered innovations have completely restructured the media industry, have completely restructured the information industries, communications industries, retail, and so many other areas. And one could say, as you were saying, that internet technology has certainly improved our experience of the financial system. Mobile banking, mobile payments being like very clear examples. We've seen robo-advisors using data to help people have make better investment decisions. And even in the core of the financial system, we've seen the progress of electronic markets, high frequency trading, and things like that. But what's not happened until now, and is finally happening now, is that you have to go to the core. You have to go to the very core of what that industry is. So you have to get to the base layer of what the building blocks are for that industry. And so the base layer of the financial system is the actual representation of the government issued money. And so what we believe is that we need to have these fully digital representations of money, digital cash equivalents. And it should be the safest possible kind of foundation. But that particular implementation of that needs to be internet native. It needs to be built in a way where it works on public internet infrastructure and where you can then layer other things on top of it. And so it's the combination of having, money as a native data type on the internet. That's kind of how I think about it. Just like video became a native data type on the internet, but have money as a native data type on the internet that has the reach of the internet and the efficiency of the internet and the kind of physics of the internet. And you got to combine that with a way to intermediate that money with code. And so that the breakthrough is sort of programmable money and having a way to compose and write contracts, financial contracts, economic contracts, social contracts, other contracts with that. And we hadn't had a technology that could do that, where out on the public internet, two counterparties, let's say me and you're in Brazil, I'm in the United States, how could we safely enter into an intermediated financial arrangement, on the internet? And there wasn't really a way to do that until blockchain technology emerged. And so one barrier was technology, a new layer, a new infrastructure layer of the internet that was designed for, tamper-resistant data, tamper-resistant transactions and computation. You put those together, then you have a building block to actually do financial intermediation over the internet itself. That's one big area and why it hasn't happened. The other is regulatory, which is, in many respects, money is actually quite simple. Money is just regulated databases, and you have these closed, permissioned databases that run in different businesses, and then there's ways to synchronize those databases, and there's rules on who's allowed to hold those databases, who's allowed to read and write from those databases, and how they're allowed to synchronize. And the supervision of that is a highly regulated activity, and that's because money has such a fundamental relationship to society, and the risks of that particular kind of data are very high because of the risks of fraud and abuse and crime or tax evasion or all these other things that we worry about with this particular kind of data. And so regulation it now needs to catch up to a world of an internet native financial system. So the internet financial system's here, and now we need regulation to catch up, just like regulation caught up to the internet communication system.
Yeah, I love the way you put it in terms of databases, but sometimes people don't realize that, like you mentioned, in this specific database, it's the core of most of our lives, and so I think we cannot have that mantra of let's say the internet startups that move fast and break things when we are talking about money, right, Jeremy? So it's very different for you to not being able to access some streaming application and not being able to access your, like I say, savings account if something goes wrong with the database, right? So I think a lot of times people don't realize that. And also, I love the way that you put in terms that, the core needs to change. And sometimes I do an analogy here, Jeremy, that most of our financial instruments, they are already digitized, all right? But we still follow not only the regulation most parts, but we still follow a lot of the steps that we had for an analog world. Yeah. When we were exchanging basically paper back and forth. And then there was this whole infrastructure that were built to be able to tackle that. And when we digitize everything, but we still hold this sort of like framework. So the analogy that I do, that is something probably similar that you're talking about, is okay, it's like we have in a car that it's completely digital, but at the end of the day, the frame is still an analog one. And the blockchain, the crypto technology, for me, is that core that you mentioned. That's the digital frame for those digital instruments.
Well, this was like in the internet where the cable companies and the satellite companies said, no, we have digital television. We have digital television. We have digital. It's higher quality. We have more channels, and they called it digital television. And they had video on demand. It was through their proprietary closed walled garden systems, right? And the phone company said, we have digital voice. Digital voice. It's better. It's digital. It's digital voice. But what people really wanted was the open internet. They wanted the ability to access anything, anywhere, anytime, very, very efficiently. And so this distinction between kind of closed networks and open networks, of permissionless innovation and sort of tightly controlled innovation. And this is, I think, gets to part of what you were talking about, which is there are risks. And I think historically, the kind of financial innovation for products in the financial system, there's been a reluctance to want to allow risks to happen. And I think right now we're facing that very much today with crypto technology, which is there are, tens of thousands of startups all around the world that are building on open permissionless networks, writing smart contracts, writing digital wallets, writing all kinds of innovations because it's permissionless. And, to a regulator, that's terrifying, right? They're hearing about protocols that are getting hacked by North Korea, or there's people who lose their private keys and they lose millions of dollars, and there's ransomware, and there's like all of these very, very bad things that are happening. But at the same time, there's these huge improvements. There's now a kind of a decentralized financial system that anyone with a mobile device can just connect to and plug into, and that's very powerful. And the same kinds of trade-offs happened with the world of communications. We used to regulate who could have an audio broadcast. You had to have a registration with a certain national government authority, and what you even could say on that was like tightly regulated. But here we are, and this is we're in the middle of a live or almost live broadcast, and there's no regulator telling us we need a license to do this. And you know what? I could swear, and people in Brazil might hear my swears. I don't know if they swear on television in Brazil, but the point is that there's the society adapted, and people embraced the power of these of open networks and innovation. And I think society will kind of vote, in a sense, for what they want, and regulators will still need to regulate and come up with these sort of parameters that provide underlying safety. But the pace of that the cycles of innovation are very different now.
Yeah, I totally agree. And on this same line, I mean, we had some conversation before in talking about the vision that, money will go on chain, right? Which means going on chain, which means money will start flowing into this new technology, blockchain, crypto technology, DLT, call whatever you want, okay? And we are seeing some different types of instruments arising, right? So we have like stable coins like USDC. We have like CBDCs that goes for central bank digital currencies that, Drex is one example of that. There's a huge development being done here in Brazil. And we're talking also of a tokenized bank deposits. How do you see these different instruments working on together? Because it's not clear for me yet how this thing will play out. They're not exactly the same thing. I said that they're not brothers, they're sort of like cousins, okay? And each one has this different risks, different frameworks. But how do you see those instruments working together, Jeremy?
Yeah, it's a great question. So I think the reality is that we're going to see a lot of experimentation here, and I don't think the answer is there's one true way. The reality will be that there'll be a number of different kind of expressions of fiat currency and our experience of fiat currency, and each of those will have different risks associated with them, and different utility associated with them, and a lot of this will ultimately reflect society's market preferences over the long run. So the concept of a CDBC, of a central bank digital currency, generally is a kind of M0 cash-like obligation of the government. It's the central bank reserve, and often it's thought of as that's like a private network. So it's not the public internet. It's a private network, and it's using technology from cryptocurrency. So it's using crypto as a way to record ledger entries, as a way to handle things like privacy and security. And so it's taking some of the innovation of crypto and using decentralized or distributed, really, kind of ledgering systems. But it's oftentimes it's sort of still very much a closed network. It's really designed to be something that is only available to financial institutions. And so this reflects how the existing two-tiered banking system works. You have central bank money, and you have commercial banks that have money on deposit, and then most of the money actually in the circulation is private money. So I don't know the exact number, but I've seen quoted many times, approximately 95% of the money in circulation that we think of as money, when we think about how much money do we have in the bank, is privately issued money. These are liabilities. These are obligations that are to a specific bank. And there's usually some societal arrangement that may provide a kind of insurance or other things in case the particular institution that you're holding that with goes bankrupt. But basically there's that kind of commercial bank money, which is privately issued. And then there's the central bank money. And I think in the case of digital currency, you'll have the kind of central bank liabilities, and then you'll have privately issued digital currency that is tied to that. And so you may hold your reserves and settle transactions between the different types of institutions that deal with a central bank using that new digital currency technology. But what you're issuing to the general public, firms, households, is a privately issued version of a dollar or a real or whatever currency you're talking about. And there you'll see some differences. I think you're going to see kind of tokenized deposits, which is the phrase that I think is often used, and you'll see stablecoins, and those will be competitive with each other. Stablecoins will always be understood by the general public to be less risky, right? They're a full reserve model of that money. So similar to a central bank money, they would be issued, but have only a very limited set of backing. It could be central bank money itself. It could be cash. It could be highly rated government bonds, but essentially it's almost like government obligation money. So very, very low risk, and then works very generally as like a cash equivalent, and would be understood to be a cash equivalent instrument by people in the financial world, corporations, individuals. And I think it's very important in a world where the cost of moving money and the speed with which you can move money goes to zero, meaning you can move value to any internet connected device in fractions of a second at a cost of fractions of a penny, which is we're basically approaching that right now over the open internet. When what I like to call when the physics of money becomes like that, then the velocity of money will increase by virtue of the fact that it doesn't cost as much to move it, and you can move it extremely fast. So you're going to have very high velocity money. And if you combine very high velocity money with bank lending risk, it's dangerous. It's dangerous. You saw what happened with Silicon Valley Bank, where in a world where we're not even talking about like super powered digital currency, we're talking about just bank deposits that are accessed through a mobile banking portal by startups, where the startups can just log into the mobile banking portal and say, move it. And you know, you can see 2/3 of the deposits just disappear. And if there's any leverage in there, if there's any duration, or you know, banks can hold 12x leverage under Basel III in many cases. So if you've got leverage and you've got money creation, and then you've got this super high velocity money on the other hand, it's a recipe for disaster. And so I think that there'll be a strong preference for stablecoins in that high velocity, internet-based, highly internationalized world. And then tokenized deposits, I think, will be also probably very popular, where you've got longer duration kind of money utility, or where the bank and the customers know that the money is largely, you know, inside of their kind of walled garden of transactions. That's my general philosophy on this.
No, and I mean, a lot of things that you mention can have deep consequence in terms of trade, in terms of, well, capital movement around the globe, and even monetary policy, right? Because and on a same analogy as well, Jeremy, I mean, the same way that information, I would say, got more aggressive, in the lack of a better word, with internet, the same is already happening, and probably this will increase going forward, right? So, and definitely that brings us to the next point that I want to see your views, is regulation. Like we said before, I mean, money needs to be regulation because of the impact that it has on society. We can argue how much regulation do we need. There are all these let's say, discussions about Austrian economics, about private money, state money. I don't want to get into that, but at the end of the day, money needs to be regulated some way, somehow, right? How are you seeing the evolvement of the regulation, not only as a general, but also more related to stablecoins? I know that you guys are present around the globe, so probably talking to regulators also around the globe. And specifically your views about the U.S. situation. Probably, I mean, the U.S., it's a little behind in terms of tackling the crypto regulation, but it looks like when it starts, it's already starting, okay? But stablecoins will be the first. What are your views on that?
Yeah. So what's interesting is that this has evolved a lot over the past few years, and the backdrop here is that really, like, almost 4 years ago, the United States government got very focused on the potential for stablecoins to be a scaled out phenomenon that could have a big impact on the international monetary system. And the reason for that was because Facebook had come along and said, we're going to launch a new global currency that's called a stablecoin. And so everybody, you know, the G7 immediately gathered.
We have 2 billion users, by the way, right? Yeah.
And right, we have 2 billion users or 3 billion users or whatever. And so everyone said, okay, we know about this phenomenon because it's there. But like at that time, just something like USDC, there was like 500 million in circulation. It was a very small thing. It was experimental. But this idea that the biggest internet company in the world by users was going to launch this new stablecoin got everyone very excited. And that was really actually the first time when governments actually said, well, we better start thinking about our own digital currencies as well. So it was prompted by that. And what actually happened was the United States government set out through the G7 and then the G20 and the Financial Stability Board, which oversees global regulatory policy, and said, we need to have global regulations on stablecoins because they have the potential to be systemic. They have the potential to have this big impact on the future of the financial system. And it was the US government that pushed that the hardest. And really what happened was, a couple of years ago, through US government leadership, the Financial Stability Board came up with a framework for the regulation of stablecoins and with a recommended set of policies. And then the G20 enacted that 2 years ago, literally about 2 years ago. And the G20 members said, okay, we're going to work on this. Now, that then has to go through, each government has its own way of doing this, right? So you have some, the regulator can just come up with the rules themselves. Others need to go through a legislative process and a rulemaking process. And so that's been happening. So now, all around the world, after about a year of like serious studying, meeting with industry, meeting with academics, everyone, now you're seeing this happen. So this year, 2023, you saw rules issued or very detailed proposals of rules that are now in kind of formal consultation in Japan, in Singapore, in Hong Kong, in the United Arab Emirates, in the European Union, the United Kingdom, and in the United States as well. But in the United States, there are proposals made by the US Treasury Department, the Federal Reserve, and then those get written into proposals that are put in front of Congress. We had the first version of the stablecoin laws passed through what's called the Financial Services Committee. And now it's going through the process of becoming law in the United States. That might happen in the next couple months. That could happen in the next 7 months. It could take 12 months, but that's on its path. But all around the world, you're seeing something very similar happen. And what's really exciting is that it's pretty consistent everywhere. Stablecoins can be issued by banks and non-banks. They're basically being regulated by the payment system and banking regulators, by the prudential regulators. Very narrow restrictions on the funds that can back them. Very specific kinds of risk management around them. And I think it's very positive. And so my view, when I look at the sort of time frame when these are going to all become law, is by really the middle of next year, in the middle of 2024, middle to end of next year. It seems like fiat currency stablecoins will officially be part of the global financial system, such that banks, financial institutions, households, corporations will know what they are, how to account for them, how they function. And I think that's going to create a huge opportunity around the world for banks, for fintechs, and of course for the digital asset industry, which has been very involved in this as well. So I think my view is very, very positive because I'm seeing the work being done, and I'm seeing relatively consistent policy emerging around this, and that should help unleash a period of innovation that's building on blockchain technology, building on smart contracts, building on technology like stablecoins. And also, I think, supporting the development of things like tokenized deposits as well. I think alongside this, you're also seeing rules being established for how banks can start to issue digital currency versions of their deposits too.
Yeah. No, amazing. And another topic that is sort of related to that, Jeremy, is that, and even I think that puts regulators in let's say a difficult job, because I think the narrative in crypto today, it's still a little mixed, okay? And people still, I think a lot of people, not everybody, but a lot of people still put everything on the same basket, okay?
Yeah.
So we are talking about, stable coins, and people are bringing Bitcoin, and those are completely different animals, okay? So I always try to separate, okay, guys, there's crypto as an asset class. I think it's already an asset class, okay? So I have Bitcoin with this narrative, let's say a macro asset, maybe a digital dollar, something on that direction. Then you have everything related to this open networks, Ethereum-like. This is the asset class. And then you have all the applications that are being built on top of this technology. And stablecoin being like, in my view, the killer app of this technology so far are the stablecoins, right? And I think when you have regulators or even the media or even people talking about things, sometimes gets me a little bit anxious that, how can we improve this narrative? I mean, how can, and again, how we can get rid of the original crypto narrative, that it has its place, okay? I'm not arguing with that, but sometimes I think it makes me more difficult for us to move on the other agendas that we have on the market.
Yeah, I completely agree, and I think there's this sort of concept that for a technology to really achieve mainstream acceptance, it has to become invisible, right? It has to become invisible. That's the magic of a technology, and we've seen that with many things, right? It wasn't until you had the Google search engine that the web became widely usable, right? Because it was so hard to get online and navigate and knowing URLs, and it was difficult. You had to work hard, but then having a global search engine and a very simple user experience to kind of find your way into that vast world of information was critical for that. Or more recently with or maybe not quite that recent, but the adoption of touch smartphones. Smartphones were terrible for a very long time. I mean, it was awful, and there were so many multi-billion-dollar companies that put billions of dollars into failed products, and then finally, you had it. The complexity kind of disappeared. AI recently with GPT, right? AI was not an accessible technology, or we only experienced it through very lightweight applications of machine learning. But then when you finally got a chat interface on top of these large language models, it made it accessible to people. And I feel the same about crypto, which is the user experience of accessing a digital wallet, of using digital assets, whether they're stable coins or digital tokens from a commerce relationship you have, or a game that you're playing, or kind of the capabilities that tokens make available, and then the interaction with the blockchains themselves. That all has to go into the background, right? A user should not know anything about a blockchain, any more than they need to know about HTTP or SMTP or TCP/IP. They don't need to know any of that, right? So it needs to become invisible, and the crypto and the blockchain of it needs to disappear. And so as a company, Circle, we're investing a huge amount in infrastructure and products and developer tools to really elevate the user experience, so that it is that the Web3 experience just becomes as familiar and simple and easy as the Web2 experience that we have today. And the good news there is that a combination of regulation, which will provide legal certainty and certain levels of safety around the intermediaries that operate this, which is necessary for society to trust this. You need to have that, the regulation. The combination of that and this rapidly maturing technology, and it's maturing in ways which will make it invisible. That's exactly what's needed. So the combination of those over the next 12 months, I believe, will lead to applications, killer apps, and consumer products and institutional products, and the use of this in a far more seamless, simple way, where it kind of goes into the background. And I think that's really key. And then we're not out talking about all of the speculative assets, and we're not out talking about your MetaMask wallet and gas fees and using all these things that just make no sense at all to the average person.
I totally agree. And you already gave me the hook for the next question that is like a Web3. And although Circle is more known by the issue of USDC, I know you guys are developing a lot of more in terms of technology related to Web3 and related to this. I mean, making this technology usable, right? At least for normal people, okay? And can you tell us a little bit about more of what you're cooking, what you're building, and what's your vision in this Web3?
Absolutely. So in very simple terms, our vision is that there's this internet financial system that's being built, and that stablecoins will be a really critical part of that, and will be widely used as a unit of account, as a medium of exchange, and that the stablecoin networks that grow will be like the web, like an information network. There'll be these kind of these monetary networks, and in order for that to really grow, it needs to be super easy and simple for people who are building applications on the internet to connect to it and use it. And so we've, through both acquisitions and new product development, have been working on what we call Circle Web3 services. And it's conceptually similar to like Amazon Web Services, where Amazon said, hey, we built all this technology to run an online store. How do we start taking that and making that available to other people who want to build online applications? So the same kind of thing. We've spent 10 years building technology to do on-chain finance. And so what we've sort of figured out is, wow, we could actually make it really simple to enable existing internet companies, businesses, and fintechs and others, whether you're a consumer internet company, an enterprise, or a financial company, to build applications that connect to this Web3 world, that allow you to surface this in very simple ways to your end users, safely, compliantly, without a lot of the complexity, both from a user experience perspective, but also for the developers of these applications and the businesses that run them. To the operational burdens of doing that are also really complex. And managing blockchain nodes and knowing how to interact with all that infrastructure and building or deploying and safely operating smart contracts, this is difficult stuff. And so we're really just abstracting that away into a family of products that are these Web3 services that can accelerate how any existing business, any existing internet-based company or financial company can plug into this new internet financial system and build applications. So it really is, how do we encourage the development of more end user applications? And to the earlier question and the topic we were talking about, one of the things that we're doing within that is we're trying to build more and more of the abstractions so that the user experience can be really simple. And so we're solving some of the hard infrastructure problems in order to make the crypto of it all kind of disappear and make these much more straightforward experiences.
Amazing. In Brazil, we had a very successful development with Pix, the instantaneous payment in Brazil. I think right now it's like a global case of success. And now we are in, let's say, the first phases of the Brazilian CBDC, DREX, as they call it. Are you guys at Circle following the developments here in Brazil? And if so, do you have any view on that, Jeremy?
Yeah, so we've definitely been following the developments in Brazil very closely. And I'm very encouraged by what is happening. Obviously, Pix itself is a great example of a modernization in account-to-account payments in society, and is great. But I think clearly the next generation of money is programmable money. It's money that can be interoperable in a wide variety of applications, and is also something that can ultimately interact with over the internet with the rest of the world. And that's really where I see something like DREX coming in. And it's, I think, super impressive that the central bank is at this point, testing and trialing a technology that's built on the same technology as Ethereum, that's built on blockchain technology, that's built on all of the basic underlying building blocks that is at the core of the innovation in the crypto and blockchain space. And I think that model of bringing the kind of strength of a controlled network and a reserve asset that is with a central bank with the innovation of blockchain infrastructure and the potential to have that both work within a private permissioned world, but also interact with the public internet in different ways. I mean, that to me is the future of how the internet financial system will work, and the difference between kind of private and public, central bank and private sector. And so I'm very encouraged by the early developments that are happening with Drex, and hopefully Circle can be helpful in different ways as that evolves.
Yeah, definitely. It's definitely a very, I would say, forward thinking. Just for them to having choose like a EVM technology tells us a lot of things. So we're quite excited about that as well. Jeremy, unfortunately, coming to an end here. I can be talking about this subject for hours without an end, okay? But there's a lot of people in finance that are not yet following closely what's happening with blockchain, with crypto technology, okay? And I think the narrative that we talked before, it's one of the reasons for that, okay? And that's why I talk a lot about, I'm not say correcting, but bringing the different narratives separate, okay? You are one of the people who are pushing this technology. So what is your message for the folks in finance out there? They are not following what's happening. Okay, what should they pay attention?
Yeah, I think the basic message is over the past 30 years, the internet and sort of the architecture of the internet, the open networks, open software, open protocols, has collided with almost every industry in the world and transformed it, and in very positive and powerful ways. And it's changed the product capabilities, maybe 10x or 100x or 1000x improvements, and it's radically changed the unit economics of those industries, the underlying cost structures, delivery structures, etc. That is what is happening right now. The innovation of digital currency, of blockchain technology, is that internet kind of colliding with the financial system. And you don't have to believe in Bitcoin or new digital gold alternatives. What you have to believe in is the power of open software and open networks to improve how the financial system can work. And so I think for people who are trying to kind of tune in, there's obviously an enormous amount of information out there. And I think as a lot of people dive into it, they may get overwhelmed with all of the information that's focused on the speculative part of this industry. I would really focus in on the parts that are grounded in real world utility, and in technologies like stablecoins and things like that. And I'll make a shameless plug, which is I run a podcast called The Money Movement, where we really try and talk about topics that relate to this kind of transformation in the way that the financial system works. There's a lot to learn. It's a big subject area, and even people who are experts in one domain, I think, will find that it's a rabbit hole, and you go further down the rabbit hole and you get lost. And if you like being intellectually stimulated and learning about new things, it's a good place to explore.
Yeah, I agree. And I always tell here that I feel very privileged to be living and building things during this transformation times, I would say. Jeremy, I would like to thank you a lot again. I think was an excellent discussion. Thanks for spreading the word for our audience, for people in Brazil. Okay, I will just do the final marks in Portuguese. But again, thank you very much, and congratulations to what you guys are building. A lot still to be built. There's a long journey, okay? But congratulations, okay? Thank you very much.
Thank you.
Pessoal, então, cara, a gente acabou de ter o Jeremy Allaire aqui, cofundador e CEO da Circle, uma conversa super interessante. Eu queria convidar vocês para seguir o canal do Future Money. Essa semana toda de conteúdo também foi muito bacana para quem queria entender essa coisa toda do Drex, como é que isso pode mudar as carreiras, a indústria. É um prazer ter tido vocês aqui e até a próxima. Um abraço.